Good morning. We will pay attention to the transactions according to the two different inventory systems. How will the subsidiary journals be affected when the different systems are used? We already know that there's a difference between the perpetual and the periodic inventory systems, and that the transactions accounted for depends on the inventory system used. If the transactions are counted in different ways, the subsidiary journals must also be adjusted for the specific inventory system. Only entries relating to inventory and cost of sales are affected by the two inventory systems. All the other entries are recorded in exactly the same way. In the journal, if it's the cash receipts journal, there will be a cost of sales column. In the periodic inventory system, you don't have a cost of sales column because cost of sales is not recorded during the financial year. In the cash payments journal, cash purchases will be recorded in the inventory column because in the perpetual inventory system, every time inventory increase or decrease, it will be recorded in the inventory account. In the periodic inventory system, you are not allowed to write any entries in the inventory account during the year. Therefore, that you will use a purchases column in your cash payments journal. Debtors journal, in the perpetual system, we will have a cost of sales column because every time goods are sold, you have to do two double entries, one at sales price and one at cost price. In the periodic system, there will be no cost of sales column. In the creditors journal, credit purchases are recorded in the inventory column. Because you don't use your inventory account in the periodic system, it will be recorded in the purchases column. Debtors allowances journal will have a cost of sales column in perpetual, and there will be no cost of sales column in the periodic system. Creditors allowances journal, all returns will be recorded in the inventory column. That means when we use the perpetual inventory system, every time we buy goods or sell goods or return goods, it will be recorded in the inventory account, and you will use a cost of sales column and an inventory column in your subsidiary journals. In the periodic system, you are not allowed to write in the inventory account during the year, and you don't use a cost of sales account. Therefore, all purchases will be recorded in the purchases column, and returns to creditors will be recorded in the creditors allowances column. In the general journal, transactions that will increase or decrease inventory will be recorded in the inventory account. In the periodic system, transactions that will increase or decrease inventory will be recorded in the purchases account.